Good evening, everyone. Time for another silver update. Had a crazy day today. A lot of stuff to report on. Chart you're looking at is the daily chart, and I've drawn some lines here. Wanted to point out some things. First of all, I've drawn two lines to indicate what I believe would be, if we follow through, the swing rule, which is the idea that we tend to swing the same amount up as we swung down. If we follow that here, we're looking at about $5, roughly between $26.20 and $31.20. So according to the swing rule, we're projecting about $36 is the top of this move. I've been saying 35. I've been looking for, if you remember the last couple of days, I've been saying we want to see the dollar move on the breakout before we test back to support. And I was saying that $1 to $2 would be a strong move. Anything more would be a incredible move. Anything less would be weakness. We're now looking at around $2 on the move. So we're very strong here. We're going to wait and see what the follow-up is next week. We may not have a pullback due to some of the amazing news that came out today, and I'm going to cover that in a bit. Another series of lines that I've drawn are trend lines on the MACD. You can see this first one pretty consistent, and the significant point is the breakout point here. We have another series here, breakout point there. And you can see the one that we currently have, the MACD that I've been following on the daily, has now broken through this trend line. So we're looking for a run back up to the old highs on the MACD. I think that type of run will also take us to the target 35, 36, although it may also take us higher. We may also go off the charts. We just don't know what kind of move this could be. We could move to 2 or 3 on the MACD and move all the way to $50. This could be it. One of the reasons I say that, we'll have to move a little bit closer to look at what occurred today. A very interesting day, and I'll be referring to some articles that talk about this. We had a move in the morning that we had a rocket shot about, it was around, I think it was 10 this morning this happened. What happened was the COMEX made an announcement that they were going to raise margin requirements at the end of the day, which is kind of interesting. I think the last one they did was in December. We had a 10% downdraft in 2 days. I don't think that was at the end of the day. I believe that was midday. It was a surprise move, which is kind of interesting. It's like they're testing the water to see the reactions. Well, it completely backfired today, and the market took off on the announcement. Now that's very significant, and it's what I've been talking about recently with Harvey Organ and the open interest and the high level of open interest that's remaining with the days diminishing left to roll over the March contracts. The article I first want to look at is on Zero Hedge, and it's if the CME hiked gold and silver margins by 50% and nobody cared, did a tree fall in the precious metal price suppression scheme. So and here we had a number of articles actually on Zero Hedge about silver today, and it's really amazing. What I wanted to discuss first of all is just the concept of what's going on. As I pointed out the other day, the people who stand for delivery, any of these people owning silver here who stand for delivery, they're looking at having to put up the full price of their contracts on a certain date. So what a margin hike does is it encourages those who don't intend to stand for delivery to sell and move on, because they're forced to put up a large amount of money, because the way futures are is that you put up a small percentage of the value of the total contract, and then you have to stand for, or you can roll it or take your profit or do whatever you want. But if you decide to stand for delivery, you have to put up, most futures contracts it's 5%. I don't know what it is right now, but you have to put up a significant multiple of the amount of money that you put up if you're going to stand for delivery. So anywhere from 20 to 10 times to 5 times the amount of money that you initially invested. Now this move is so significant because once it was announced, the price rocketed up. Now that tells us a number of things. First of all, it tells us that it appears that the physical price is now driving the paper price. It seems to be a reaction that when the price didn't falter, it began to rise and people started to pile on. So people are making the assumption that there are a large number who are going to stand for delivery, and they are going to demand physical, and they can jump on the bandwagon and make a profit with that. The other point that's really important in this is that there comes a point in time, or theoretically there will come a point in time, where as they raise the margin requirements and larger numbers are planning to stand for delivery, the raising of the margin requirements actually becomes a positive. And what I mean by that is that when they raise margin requirements, that's both for the longs and for the shorts. So if the longs, a large percentage of the longs intend to stand for delivery, and the shorts are just trying to sell the paper down and aren't intending to actually produce the product, then it can actually backfire to the point where it hurts the shorts and not the longs. I think that may be what we saw here. And if we're seeing that, then this could be a sea change in the silver market. And this could be the point that we've all been talking about, where we're looking at a breaking of the stranglehold of the paper shorts on the COMEX. A very interesting article that has been noted by, if you follow on Zero Hedge, you see Turd Ferguson's blog that's there. This one, I don't believe it's his blog, but it's a blog I picked out that's talking about this topic. And the topic is about Winter Benton. And there have been a lot of rumors floating around about this person, Winter Benton. I'll read a little bit of it. There's been speculation whether this person is the real deal or someone yanking the collective chain of the silver bugs. When Winter Benton first popped up on the scene, he or she was met with skepticism by many, welcomed by others as a savior. Winter claims to be the spokesperson for a group of PO'd ex-JPM employees who know how to game the system in their favor. The fact that everyone has the same know-how since the Hunt brothers tried it is besides the point. Winter points out that they have the Blythe Masters playbook and they are ex-JPM. They have a darn good idea how much silver is in the COMEX, and they know how much to squeeze. The intention here is to stand for delivery and then accept a premium in dollars. Now, this is referring to a couple of things. There have been rumors for quite some time now that on the LME and on the COMEX, that people who stand for delivery have then later been offered a premium in paper to settle in paper, as much as 20%. So the idea here is that the plan is to make a 20% profit on your money each time, and then come and stand the next month and stand for delivery again. In other words, break the COMEX. So the idea here is to beat them at their own game and to just drain them of money by continuously standing for delivery. Some apparently want the silver, others want to just get cashed out and do it again. And this is kind of a crazy rumor. I don't know how much credence people have given to it, but this pattern lends a lot of credence to it. Someone, or a lot of someone's, is apparently planning to stand for delivery. And that means March could be the month when the COMEX goes bust. It's possible. It's also possible that they just pay them off in paper. It's The Chinese are an unknown factor here. Everyone knows they have enough money. I think Chinese reserves are somewhere north of $1 trillion. So if the Chinese wanted to, or anybody in fact wanted to, any hedge fund or anybody else, they could break the COMEX with what we know. This may be an indication that this is happening or starting to happen. The chart, the last thing I wanted to point out on the chart is the significance of this move. You can see that we have a number of moves where we spiked. Our first one back in 2004, spiked, rallied, took a couple of years. Same thing in 2006, spiked, then came rallied, took a couple of years for that to happen. Another spike, 2008, took a long time. This one took the longest of any of them. And we can see now on the MACD that this pattern is significantly different than these previous patterns. These are standard spike, fall down, take a long time to come back, and this one isn't. You can see we spiked, we came down, and now we seem to be crossing over to the upside. And if this MACD continues up, we don't know how high it can go. It would be unprecedented, and you can see that this move that we're looking at that occurred in the last couple of days is unprecedented. We don't have anything like that in any of these previous spikes. They spiked, they fell, and then they just went nowhere, or they dropped off a cliff. This is clearly a reversal, and it's clearly our new highs. There's no reason to think that this move could not, if we take the most bullish scenario, we're looking at a move 31. We ran from $20 to $11, so maybe through 40 from here, possibly 45. My prediction has been 35, so I'm looking at this move potentially to go from 35 to 45 before it's over. Potentially a lot higher. We just don't know. It seems like things are changing and the character of the market is changing. Some have pointed out before, you can see how these line up. We had a hint that we may take out this line, and we definitely have now taken out this line. So at this point, all bets are off as far as the technicals are concerned. No one knows where this thing is going to go. And the last thing I wanted to point out, I pointed out yesterday on my commentary about the Canadian Wolf series that I thought was a tremendous buy, and some did decide to buy that and thank me on that. Another one I just happened to come across today. This is on Gainesville. Here's another premium compression play, and a lot of people don't like to buy these because they don't like graded coins, they don't like numismatics, they don't like a lot of things. This one just seems to be a unbelievable buy. It's the 2011 Kookaburra, and it's an NGC graded MS69. Those of you who are not familiar with it, NGC is a grading service. There's two primary grading services, the PCGS and the NGC. Those are the two most respected. There's a million out there. People make them themselves, but these are called slabbed coins, and they're certified to be MS69, and they have a premium on them. Now, normally this premium, the cost of slabbing these coins is significant. I think if you have a ton of them slab, you can get $10. But the standard price for these kooks right now is, I think it's north of 37, maybe 36. You're not going to find it. You're going to find at least $4 premium. So we're talking about, with the standard kooks, you've got 36 or 37 right off the bat, and this is only $5 more than that. So you're talking about a $5 premium for the slab, and that's, I've never seen that anywhere. So some of you might want to consider picking up some of these. I don't know how many Gainesville has of these. They're not like APMEX. They don't give you a number, but these just seem like an incredible deal. There's a couple of others. If you want to find them, you can just select your country, select silver, select 1 ounce, and then do a search. And actually what I want to do is I want to select the year because it's giving me all these boxes. So I'll select 2010, and you can see the Tiger. That was one of my favorites. This Slab Tiger's at 101.72. Now that's an MS70, so that's important. That's one higher. And here's a Rabbit that's 43.16 slabbed, and then here's that Kook. So here's a slabbed Rabbit that's MS70. There's not a lot of difference between MS70 and MS69. So you've got a couple of them here. You've got the slabbed Rabbit and the slabbed Kook. I really don't see how you can go wrong. Now, of course, silver can crash from here, but I think even if it crashed $20, I don't think you're going to lose much premium on either one of these. They're going to go out of circulation, just like this Tiger did. You can't find the Tigers anywhere anymore. I think APMEX has a couple of them. And I just did a check today. The Tigers that I bought for $30 around last fall, they're now going for $50 on eBay. So just an idea for those of you who are still looking at picking up some. Might be interesting to buy a few of those. So we're looking at potentially a explosive breakout move. A lot of rumors swirling, a lot of crazy stuff happening in the world. This may be it. This may be the point where the LME, the COMEX, the JP Morgan, SLV, and all the manipulations might end. One other thing I wanted to point out, I forgot about that. I wanted to point it out real quick. If we go to, let's just go to Google and then jump to news and do a search. Here we go. We've got coverage here. Silver rises to 30-year high. So we didn't have this earlier, 3:22 p.m. That's why. Silver extended a rally to a 30-year high. They're blaming unrest in the Middle East. Palladium jumped to the highest in 10 years, and that's about it. That's one story. Here's another story, a news channel, something. So not a lot of coverage. If we go to Yahoo and look at our news and search the news and put in silver, we get Yahoo covers it finally. And then here we go, Silver Lake. So you can see the dearth of coverage of this spectacular move in silver, which, by the way, silver was the highest returning asset last year. If we look on our Netdania on the quote applet, they give the year-to-date returns, and I pointed out last year, at the end of the year in December, that silver was the highest, had the highest return for the year at 80%. We've been negative this year. We now are at 32.6. We're now at 5.75% for the year percentage change. Oil's still down 1.57%. Gold's still down over 2%. You can see some of the currencies. We've got a currency move here that's the pound versus the yen. But other than that, silver again is looking like it's going to be the leading asset again. And we're not getting any coverage to speak of. So I think silver may end up being somewhat similar to rhodium in that it's just not followed, and it's a good thing. We don't want it to be followed. We don't want the world to end. A lot of us who are invested in silver would like to see silver go up to a few $100s and not really have anyone notice. That would be a wonderful thing. A lot of people have commented over the years on my videos and comments that I've made. I've got a lot of arguments from people. One of the chief arguments that the silver bashers have always used is, well, that's fine, silver may go to the moon, but everything else will go to the moon and it won't be able to buy anything anyway. So that's a real common argument you hear, and it's just not true, because anybody who knows the fundamentals knows that silver could move to hundreds of dollars an ounce with nothing else changing, even without inflation changing. Silver is not an inflation play. It is, but the reason why I'm in silver has nothing to do with inflation. It has to do with the completely out of line supply and demand fundamentals that have been growing over the last 30 to 40 years as the United States has depleted its entire supply of silver, which is the largest that's ever been accumulated in the history of the world, and has turned to a silver suppression scheme to force all of the silver out of existence until there's just virtually nothing left. So it's not an inflation story primarily. It does protect you against inflation, but it's a totally different story than gold. It's a supply-demand story. And as I mentioned, rhodium at one point moved from $300 to $10,000 an ounce, and no one even noticed. So that's quite possible. That's a 33-fold move. From this point, that would be $1,000 an ounce. It's quite possible that silver could move to $1,000 an ounce, and the majority of people be uninterested or not really aware of it. That's an ideal scenario, I think, for most of us, because we don't exactly want to have a lot of profits in silver and have the world be at an end, or have inflation, be in a state of hyperinflation. It would be nice to be able to flip some silver and for some land, pay off your mortgage, do a lot of stuff. So that's a good sign. I like to see it when the news is not covering this. And this is a fantastic, unbelievable, newsworthy story, and the news isn't covering it. So we'll wait and see what happens next week. We don't start again until Tuesday, I believe, because we have a holiday. But I expect us to continue on our move to 35 before we correct. And we'll have to wait and see what the delivery is on the COMEX and what the open interest is, and whether this winter story has any legs. And we'll talk to you next week.